at the moment, Idea Cellular is in exploratory talks with Vodafone, looking at a strategic partner in the company.
We told you so, not one, not two, but several months in advance. August is when Nisha Poddar had broken that story, the possibility of a merger.
The talks have been at an advanced stage. There have been some more concrete talks between principal to principal of Idea Cellular as well as Vodafone London.
This is the big story. Remember, CNBC TV18 broke this story first, that Idea and Vodafone were looking at a possible merger, and now that merger has been announced.
More than 6 months back, 23rd of August 2016 to be precise, we broke the Vodafone Idea merger story. At that time, we had received only denials. However, on the 31st of January this year, Vodafone and Idea confirmed our news break, and today it is official. Hello and welcome to this special show, Vodafone's Big Idea. I'm Surbhi Upadhyay, and with me is a lady who got us that story to begin with, Nisha Poddar. Well, over the next 30 minutes, we will bring you the best expert analysis on the mega merger, and we'll also speak to the top managements at both Idea as well as Vodafone. Joining us would be Rajan Matthews, Director General at COAI, Naveen Kulkarni, co-head of research at Phillip Capital, and Simone Rees, partner M&A at Nishit Desai Associates. We will bring you snippets of Nisha's interview with Vittorio Colau and Kumar Mangalam Birla. But first up, the deal contours and what exactly the announcement contained today. Now, the combined entity will have an enterprise valuation of $27 billion. It will have a revenue market share of over 41% and total network capacity of 35%. Now, here is how the merged entity is going to look like. Vodafone will own just over 45% equity stake to begin with, and Idea will own about 26%. The Aditya Birla Group and Vodafone will have equal voting rights. The Aditya Birla Group's 21% stake in the merged entity has been valued at just over 72 rupees per share. This was the stock price on the 30th of January when both the companies confirmed that they are in talks. Additionally, Birlas will buy just under 5% in the merged entity at a price of 108 rupees per share. Kumar Mangalam Birla will remain the chairman of the merged entity. The CFO would be appointed by Vodafone, and the CEO would be chosen based purely on merit. The deal is expected to be completed in the current calendar year, 2017 itself. Nisha, let me now come to you. Do take us through some of the key questions which are still out there, perhaps some of the details that we will get answers to over the course of the several months.
Thanks for that, Surbhi. Of course, the three important questions that I'll take you through, and I have some bit of answers as well. The first question, what happens to the shareholding pattern post this merger really takes place? So 26% currently with Aditya Birla Group and 45% stake with Vodafone PLC. But they have equal voting rights. So what they will do over time is that the stakeholding will also have to be equal between the two equal partners. And for that, they've got timelines and the price also. So 130 rupees is the price at which Aditya Birla Group has the right to buy additional 9.5% stake from Vodafone PLC to equalize the shareholding pattern. After 4 years, if Aditya Birla Group does not really buy more shares of the merged entity, then Vodafone PLC will essentially have to reduce its stake to equalize with Idea Cellular. So that means a substantial stake sale from Vodafone PLC is expected to happen. How will the capital structure really look like? That's my second question. And will it be leveraged? How will they take care of the debt position, even though two big companies are coming together? Remember, this is the big talking point in the telecom sector. The competition is intense. So first, the current debt of the combined entity, as per the valuations given, is about $16 billion for the enterprise valuation of a company, which is $27 billion. So 4.4x EBITDA is the debt level, the leverage level. It is expected to reduce to 3x by way of synergies as well as tower asset sale. But remember, synergies heavily dependent on that, whether or not they fructify. How confident is the management? They say they are confident, but we'll have to see. And the second important thing is that at a time when they will lose a little bit of their EBITDA, also because of spectrum shedding to meet the regulatory norms and the competition is intense, it is expected to be a difficult task. So now to the stock performance performance of Idea Cellular. It was under pressure after the announcement really came out and all the merger details came out. And some of the brokerage points that have been mentioned, like Religare says that the valuation is lower than what the street was expecting for the merger. Credit Suisse says that it is highly leveraged, so leverage is one important talking point in the market about the Idea Cellular stock. And IDFC brokerage report says that it's negative for Idea shareholders. So this is what I've got in terms of analysis, Surbhi.
Okay, all right, Nisha, thanks for bringing us up to speed with some of those areas where we still need some answers and clarification. Well, in fact, on that note, let's actually listen in to a part of the conversation that Nisha had with Mr. Birla as well as Mr. Vittorio Colau of Vodafone.
At 108 rupees per share, Mr. Birla, the implied enterprise valuation of the company comes to about $27 billion. And its pre-synergy EBITDA of the company together is $3.6 billion. So at $27 billion, you have a 7.5x or multiple of EBITDA at which you have done this kind of a valuation, while on the other hand, the debt remains at $16 billion, which is 4.4 times of EBITDA, which you have stated will come down by synergies as well as star asset sale. Now, give us a sense of why these rich valuations when we also compare it with other competitors in the telecom sector.
One fact that I'd like to correct, the EBITDA, the valuation, the multiple on EBITDA is about 6.3, 6.4, not the number that you mentioned. You talked about 7 plus. So there's a slight correction there.
Right.
I think that both the valuations, there's been a joint valuation done by independent valuers who are reputed firms. We have an independent fairness opinion, again by a very reputed investment banking outfit. I believe that 110, 108, which is the price at which we are committed to buy from Vodafone to take our stake to 26%,
Yes.
is the price at which the scrip closed
Yes.
on Friday.
Right.
So it reflects the sort of current market position.
Yes.
I believe 72 is the price just before the information based on the leak that had happened,
All right.
which I'm told, you can't take me up on this later because there's nitty-gritty, but I'm told that that is what the valuers have taken, we assume, as being the real value, because there has been a run-up post the leak, and therefore the price in some way is artificial. But more importantly, the valuation puts the relative merger at 50-50, which means they valued both the companies equally, and that is the basis going forward.
Well, joining us to discuss the deal that was announced today is Naveen Kulkarni, co-head of research at Phillip Capital. We also have Simone Rees, partner M&A at Nishit Desai Associates, and Mr. Rajan Matthews, Director General COAI. Gentlemen, thank you for joining in. Mr. Matthews, first question to you. What do you make of the announcement? It has come through. Is it overall going to be positive for the sector? Will it reduce the competitive intensity? What do you see in the next 1 year?
So I think it's positive for the industry because I think both operators have signaled their intention to continue to play aggressively in the Indian market. So that's good news for the industry and also for the consumer. I don't believe that the competitive pressure will ease up in the present scenario that we are seeing because there is an attempt on all operators to continue to gain market share in the new push on data services. So I think we'll see that continuing to play out in the market. I think this deal also is about not only the present but also positioning the entity for what is to emerge in the future. And I think this was also highlighted in the announcement. There are significant benefits to be had in the future, and the companies are positioning to take care of those benefits as well.
Right. Hold your thoughts there, Mr. Matthews. So, Mr. Kulkarni, coming to you, what do you think about the valuations at which the deal has been done? Even though it has long-term benefits for both the companies and the telecom sector, Idea Cellular stock was under pressure today.
From the valuation perspective, see, the more important number is what probably the promoter will be buying into the company. So they are looking at around 110 rupees, where they will be buying around 4.9% stake in the combined entity. I think that's the more critical number to be looking at than anything else, because the other numbers are more of an indicative numbers based on which the share swap ratio has been decided upon. So the principles for valuing Idea Cellular, similar principles would have been applied to Vodafone to value the company. So I'm not very particular about the valuation methodology used to figure out the share swap ratio for the company, but more importantly, what intrinsic value that can emerge based on the kind of synergies which can evolve in the combined entity, and those are the more critical factors, and what level the promoters are comfortable to put in money, and the option that they have taken to increase their stake up to 9.5% over the next 2 to 3 years, where at about 130 rupees. So these are the more important metrics to watch out for. So I think from that perspective, still the valuations which appear to be reasonable.
All right, let me also get in Nishit Desai into this conversation. Simone Rees is joining in from there. So talk to us about the capital structure while constructing the deal, the contours that have really come out. That also quite shows the leverage position, which a lot of brokerage reports have written about. So as an M&A expert, what do you have to say about the capital structure of this deal, and would it really solve the problems of both the companies?
Well, look, the capital structure today is a reflection of, in terms of the equal merger, and clearly it could not have been achieved otherwise. And therefore, it has been constructed cleverly, and it has been done before. Contractual commitments now will need to be enforced in terms of how the voting rights are going to be exercised by both parties, but voting arrangements are recognized, have been adhered to in the past, and I don't see why this really won't pass the test of law. Also, it is a great way to sort of achieve the objective of the parties in despite having disproportionate shareholding, having equal say on certain matters.
Right.
Okay, on that note, actually, let's listen into another part of the conversation that Nisha had with the management, both Mr. Birla as well as Mr. Kulao, discussing the sort of synergies that this deal brings to the table. There's some big numbers the company is throwing out, $2.1 billion. That's the kind of annual synergy or annual savings after the 4-year completion merger process is over. So take a look.
There's great industrial logic and business sense to both of these businesses coming together. If you look at the combined company, we're talking about leadership in 22, 23 circles. We're talking about market share across the country of about 40%, customer market share of about 35%, 1850 megahertz, which is a very large bank of capacity. So on and so forth. So basically, it's about the coming together of two companies who have huge complementarity.
And we intend to be one of the strongest competitors in this country.
Mr. Kulao, take us through how confident are you in terms of synergies, gaining that, the component of spectrum that is coming out from this number, and also your plans for the tower asset sale, which is also going to be playing an important part in your overall valuation dynamics.
Yeah, Nisha, we are very confident about the synergies, and we are very confident for two reasons. First, the large majority of the synergies come, of course, from the towers. And if you think about, two companies that are going together, and as I said, typically Idea are stronger where Vodafone is weaker, and Vodafone is stronger where Idea is weaker. We had some circles where we had single-digit market share, and maybe they have double-digit market share, and vice versa. So by putting together the towers, very easily you can see the total number of towers needed will be at least 20, but probably more % less than what it is today.
All right, on that note, on synergies, it's time for us to hit a break at this point. But before we go, I leave you with Vittorio Calao, the CEO of Vodafone Group, and what he had to say about the name of the new brand for the merged entity.
Both Vodafone and Idea are amazing brands in this country with a lot of loyalty and a lot of affinity created in their customers. We will definitely leverage on both. Now, of course, we will develop professionally an identity and the marketing and the communication strategy. But what we can say today is that it is our intention to continue to have the presence of both of them in the market. Whoever is today working with Vodafone or with Idea should be reassured and should continue to invest because these two brands together will become a power brand.